Good morning, everyone, and thank you very much for joining me. This is the morning market review, and it is, of course, Wednesday, the 21st of February. My name is Russell Shaw. I'm a senior market specialist at FXCM. And just to start off, we'll go through our disclaimers, and I'm going to be bringing up our high-risk investment warning first. I'll get the camera image out of the way. There we go. If I can just leave this on your screens just for a few moments, and if you can have a quick read through that. Okay, just another few seconds. All right, let's bring up our market commentaries disclaimer. We'll keep that on screen for a few moments as well. Okay, terrific. And as our method suggests, let us go through to the real rate. That's where we usually start our analysis. Okay. Hey Mia, good morning to you and welcome. All right. So I made a mistake yesterday. I'm quite embarrassed about it. Nvidia's earnings are coming out today on the 21st. I got my days mixed up. My apologies. But I think what we discussed yesterday is still pertinent. Now, we're carrying on with our discussion that we started yesterday. What was that? That the market needs to perhaps start reflecting what's going on in the hey Kim, good morning to you. Has to start reflecting what's going on in the real rates market. Okay, so we've got the S&P 500 on the bottom chart. We've got the real rate on the top chart. This is the weekly. There's a lot of arrows here. Let's just get rid of all the arrows. Start the explanation from the right-hand side of the... Okay, so the time value of money. Does everyone understand the time? What we mean by the time value of money? So we've got the real rates moving up. Okay, as the real rates move up, you can see that we have also got the stock market moving up. That's unusual. It's unusual, and what we said is that there is a drive from the numerator side of the time value of money. What's the numerator side of the time value of money? It's the earnings. So earnings have been very good, and the market's responding to those good earnings. But I'm just worried that there is a pullback that's due. And I think that the pullback, the reason is profit taking, and besides profit taking, the higher interest rate. Now look what's happening on the S&P 500. It's starting to come under pressure. Hey Anna, morning to you. Let's just take a look at the S&P 500 in more detail. We're taking a look at it on the weekly chart. I'm going to share that with you now. Okay. Let's get rid of all these drawings. These are the drawings we put in yesterday. All right. What's important here? We're overbought. Okay. We're overbought. And we're just going to have to keep pointing that out until the condition normalizes. But let's zoom in. I'm zooming in now to the last few days. This is a weekly, I beg your pardon, just the last few candlesticks. And let's take a look. Okay, let's take a look at the reference candle here. Okay. So we've got this. We've got the condition one. Condition one is the candle with the highest high in at least 3 candles. Okay, that's last week's candle. And then this week it's Wednesday already. We've got what we call an inside period. An inside period is a candlestick that the range of this week's candle is completely contained in the range of last week's candle. In other words, the bulls haven't got uh, the conviction to take price up above last week's high, but okay, the bears haven't got the conviction to push the um, to push um, the price below last week's low. So we've got an uncertain week. That uncertain week, I think, is a symptom of the fact perhaps the market's got ahead of itself, and that's the key here. Is that the market seems to have got ahead of itself, and the fact that we've got this inside period is something we're just going to have to keep looking at. Now, what we can do is we can just put in a line like this and just watch to see if we're going to break below last week's low. That would be condition 2. And if we close below last week's low, that would be condition 3. Then we've got a potential turning point coming in just as the um, RSI is overbought. Hey Indran, good morning to you. Hey Raj. So you can see that we are getting now some indecisiveness. And the way I think we've got to look at this indecisiveness on the risk markets is, well, who's sort of the indecisive party? And given the fact that we've been running over the last few weeks in bull mode, I think that the bulls are sort of the big party to blame here, so to speak. We've lost this. So again, I want to apologize. Yesterday I was talking about Nvidia earnings. They're coming out today. They're definitely coming out today. I believe 5 p.m. New York time. We should get the Nvidia earnings. They'll come out, and I think that may be some sort of catalyst, some sort of trigger to profit take. Okay, I think a correction is due. Now, it's interesting. We've got a question from Kim just suggesting, why is the US dollar moving sideways? Well, I think that the market's indecisive. Let's take a look at the US dollar. Okay. So I think that this indecisiveness is probably something that is a theme that seems to be running through the market. And then Raj has just put just after the Fed. So we're getting the Fed minutes out today as well. So we kind of got 2 important data points today, don't we? We've got 2 important data points today. And the data points are effectively the minutes and Nvidia, right? So perhaps the I tell you, we're going to have to just be a bit patient. There seems to be an indecisiveness that's kind of running through the markets at the moment. Look, there's no question. There's no question. Okay, when we take a look at the real rate, and instead of taking a look at the real rate to the S&P 500 at the bottom, and we just put the US dollar, okay, it's obvious. You can't argue against the fact that the US dollar has been responding to rates. You can see it. Okay, there's just no argument to be had there. Okay, up, up, down, okay, down, and up. up. Sorry, I'm not sure if you can hear. There's some work going on in the background, so some sort of drilling. So if you can hear that, I'm begging your pardon. But you can see that the correlation is there for all to see. Let's put in the correlation coefficient. Okay, so the correlation is clear. Okay, let's put in. Make sure we put in US dollar. And we can see that we're pretty close to 100% there. Kind of lost it back in July last year, but since then it's been traveling at close to 100%. So the idea here is we carry on watching the real rate. I really think that is a key driver. As long as that real rate has lifted, okay, the dollar has lifted. Now, there has been I think, a sense in that move, but there's been a nonsensical move in the risk markets. Why? It's because of the earnings. So I hope that kind of makes things clearer. And it seems to me that there's this theme of uncertainty that's running through the markets. So why is the US dollar moving sideways? Well, the real rate's moving sideways. Okay, you've kind of got this. You kind of got this doji. Inside candle doji. I mean, it's just uncertainty from a number of angles. Okay, all right. Kim, the idea here is that the real rates have been moving sideways. So the US dollar has been moving sideways. We're not sitting at a correlation of 100% where it's going to be lockstep 100% moving, but we're sitting at, let's just put in a label here, a value. It's sitting at 90%, so the markets have just been moving sideways over the last 2 weeks. I don't think there's anything abnormal about that. You can see that when we're looking at the real rate. Last week there's a doji. This week, inside period. Last week, take a look at the dollar. A very small, short body. Okay, moving sideways this week. When we go through to the S&P 500, put in SPX 500 here. Okay. We've got a small body last week. We've got a small body this week. The last 2 weeks have been run. There's been no volatility. Okay. So why is it important for forex trading? What's different about forex trading? The market's going to do what the market's going to do. So the idea here is when the volatility expands, the volatility expands. The market's not going to do what you want it to do. It's going to do what it's going to do. We've got to react to it. And then we're getting two important fundamental key points today, right? We're getting the Nasdaq, we're getting the NVIDIA results, and we're getting the FOMC statements. Okay. All right. Nasdaq, yeah, let's do Nasdaq. All right. Okay, here's Nasdaq. Here's Nasdaq. All right. So this is interesting. What can we say about Nasdaq? What can we say about Nasdaq? Last week we've got condition one. Condition one of what? Condition one of a potential reference candle. Now, the reference candle is a little bit more advanced. It's going to be a little bit more advanced on the Nasdaq side than on the S&P. Why do I say that? It's because we've actually taken out the low here, haven't we? So we've got condition 2. Okay, so we've got condition 2 here. All right. So the fact that we've got a reference candle here, and the fact that we've got condition 2, it would be interesting to see if NVIDIA's results push. It will be interesting to see. So Raj is saying we're not overbought. Okay, but what happens if NVIDIA's results do push the Nasdaq down? Because NVIDIA itself is overbought, right? And we get a close below last week's low. So yeah, we're not overbought on the Nasdaq, but we are overbought. We are overbought on the S&P. Okay, so the fact that we're overbought on the S&P, I think, cannot be ignored. The top 6 holdings of the S&P, I think it's the top 6, are all technology companies anyway. So S&P 500, although Nasdaq typically seems to be the index that we suggest has the growth company angle to it, the fact of the matter is that the S&P 500 is being driven largely by Magnificent 7 stocks anyway. So although Nasdaq itself may not be overbought, I still think that we've got to respect the overbought condition on the S&P 500 side. So if we've got the overbought condition, okay, then let's just form a hypothesis here, and let's bring US dollar into the hypothesis. Now this is a hypothesis. It may turn out correct, it may not, so it's going to be subject to correction here. But let's just say we get the risk markets pulling back because there's that overbought condition. What's going to happen theoretically to the US dollar? What's going to happen to the US dollar theoretically? I would suspect that the US dollar actually gets an inflow, an injection of capital. So there would be kind of a rotation of capital out of the risk markets into safety being the US dollar. So I think what could potentially happen, and again, I'm saying subject to correction here. So here we're bringing in the sideways movement that Kim was referring to on the US dollar. What might happen, Kim, is we might get the risk market pulling back and that overbought condition normalizing, and at the same time we may see that volatility that you want to see in the US dollar. We may see that volatility pick up in the greenback, and so again, I would suggest that the market is pretty much, there's this uncertain theme running in it, and we can see the small candlesticks. We can see the inside days, and I think that the key here is that we've got these data points out today: NVIDIA on the one hand, and FOMC on the other hand, and I think those might unlock that volatility that we are hoping the forex market and the other markets effectively start discounting in. All right, Raj, I'll catch up with you tomorrow. All right, so again, let's see how these data points pan out today. Yes, I understand there's some sort of frustration because the markets seem to be moving sideways over the last 2 weeks. There's not much we can do about it except understand that there is a flow of uncertainty. And until that uncertainty disappears and we get some sort of conviction in the market, well, that's just the way the markets are going to be. And we can't do anything but wait for the markets to open up. Okay, and then hopefully we're on the right side of the market. And if it plays out as per the hypothesis, what's the hypothesis? In that there is some sort of profit taking on the risk side, some sort of injection of safe capital going into the US dollar, and that's opening up some sort of volatility that potentially is tradable. Let's see if that's the way it's going to go. We'll have more information to discuss come tomorrow. Okay. Which way will it go? Yeah. Well, I think so. This is what I think is going to happen with the FOMC minutes. I think the FOMC minutes are going to have some sort of hawkishness to them. I think that makes more sense. Why are they going to have hawkishness to it? Because the data just seems to be pushing the rate cuts out, and I think that if the FOMC comments are more hawkish, that potentially acts as a headwind for the risk markets, and I think it's a tailwind for the dollar, effectively. So we will just have to see if that is the way the FOMC minutes come out, and if that's the way the market reacts. What we can do just before we finish off, let's just take a look at US dollar on an hourly time frame. Something else just to kind of something else that we can just say about the dollar, Kim, which I think is important, is don't forget Monday was a public holiday in the US. So that in of itself is going to affect the volatility. So we basically missed out a day of trading because of President's Day in the US. So now is more important than ever just to be patient. Let's just see if we get the movement up here. So a potential bullish crossover. So we've just looking to see if we get a bullish crossover here in the EMA. We're already seeing some sort of movement towards the upper quintile here. If we get towards that upper quintile and we get a push over, and then the key is, remember, we've got a hold in that upper quintile, then there potentially some sort of bullish pressure building in the US dollar. And if there is some sort of bullish pressure building in the US dollar, I would suspect, and again, I'm going to tag on subject to correction, that there is going to be some sort of profit-taking pressure on the stock markets. I hope that makes sense. Whether it pans out that way, let's wait and see. We'll have more to say about it tomorrow. But I think there's a number of factors here that we've just got to respect. Number one, that there's been a day lost to a public holiday. Number two, the markets are uncertain, and we can see that via the small candlesticks and the inside periods. And the fact of the matter is there's two important data points coming out. I think that ultimately what does happen here, and again, I'm tagging on subject to correction, is that the real rates eventually do come into play and put some pressure on the stock market, and we do see some safe haven flows. All right. Are there any other questions before we wrap up? All right. Nothing coming through. So let's wrap up here, guys. If you found this helpful, click on that boost button. And if you didn't, don't worry about it. But we'll do it all again tomorrow and see if we can expound on the hypothesis that we've put together today. Thanks, guys. Cheers.